Hello, what's going on, guys? Hope you guys are doing great and hope you all are doing amazing. Okay, so today, in this video, we're going to study US oil using the concept of harmonic patterns, inducement liquidity, order block, and entry, which is based on order block entry and M's and W entry pattern. Okay, so we're going to talk about all of this studying US oil today. Okay, so now let's get it started. I just hope that my screen is sharing. So let me get US oil. I'm going to use this guy. Let me check if this guy is okay. Good. So let's study US oil today. Okay, so I'm going to hide all of this information. I'm going to hide, I'm going to hide all of this. Okay, so good. Before we start this study, before we start this study, let's discuss some certain things which we are going to look at for during the course of our study. Okay, let's look at some certain things we have to look at for during the course of this study. First of all, we're going to look for harmonic patterns, which I've talked about. So, and if you don't know how the harmonic patterns, of course, you need to join the training for you to be able to know how to trade it and know how to identify it on the chart. Okay, so there will be a link below this video to sign up or to go to the website and look at the content and see if it's something that you can be able to learn. So we're going to explore different types of harmonic patterns, and then we'll look at inducement liquidity, then entry based on order block, and M's and W at the potential reversal zone. So we'll look at for harmonic patterns. We're going to have harmonic patterns of this form. Okay, we're also going to have how many patterns of this form. Okay, and there are so many of them. There are so many of them. You can have a shark pattern as well, which is of this form. Now we are looking to buy from here. Okay, we are looking to buy from here. We are also looking to sell from here. And this one, we are looking to do what? Buy from here. So how many patterns are M's and W patterns that are measured with Fibonacci alignment? Okay, so it's a measured structural pattern. So we identify the structure on the chart, and then we use Fibonacci to measure the pattern to know whether it is valid or not. So that's what we're going to look at for in this video. We're also going to talk about inducement liquidity, which will validate our potential reversal zone. So we are going to see all of that playing out on the chart. I'm going to show you what is an inducement liquidity. If we have a potential reversal zone here, where price is likely to reverse, we are going to look and see if we have an inducement, a structure, the last structure before the potential reversal zone at this level to know if it's valid or not. You're going to see all of that on the chart, okay? We're also going to talk about M's and W entry formation. Now, if price are gotten to a potential reversal zone and we looking to, let's say for instance, we'll have a setup in this form, and we're looking to buy from here, we're going to look for W formation at this level, okay? And we're going to look at it very well and then take our entry. So let me talk about this type of entry. And this is going to be on the lower time frame, okay? So we are looking for a pattern of this form. Let's assume that this is a valid pattern, okay, into this key level, okay? So on this key level right here, we are going to look for something else to validate that price is going to reverse here. So we have what we call order block mitigation. We're going to have a lot of reaction at this level. Sometimes price will come here and then begin to give us a kind of a trend line. You're going to see price trading in this form. Okay. I don't know what's wrong with don't know what's wrong with that guy today. Let me look for something next. Okay, so we're going to look for price might start stalling, start to give us this kind of, you know, trend line. Okay, so it's a good one, but that is not what we're looking out for. Price can do this, and then what we are looking out for is what we are looking out for is if price drop into this level, give us something like this. Okay, takes out these points, trade off. We are going to measure this move with Fibonacci extension. That is how to validate if it is a valid displacement or not. Because at the time, you begin to ask yourself, how do I know a valid displacement? Okay. Is it that price I've gotten to this point, then it's valid? So we need to have some parameters in place to help us identify a valid displacement and an invalid displacement. Okay. So we need to make sure that with Fibonacci extensions, we need to make sure that this move beyond the B point, beyond this B point here, this is X, A, B, C. So they move beyond this B point here. Let me label all of them for you guys. So we have, okay. So we have X, we have A, okay, and then we'll have B. I need to make sure that I'm detailed enough in this video. I don't want to jump any step. So I'm going to take it step by step. 1 minute, guys. Just give me some minutes. Let me just. Okay, so I'm going to be very, very, very detailed in this video. I'm going to explain every stage, every step. So this video is going to be very raw, unfiltered. I'm going to explain every step of the process. The only thing I will not be able to explain is the harmonic patterns because it requires you to study it. It requires you to be able to sit down and look at it and study it very well. So I cannot be able to cover harmonic patterns in this video because there are about 10 or 9 of them. We have cipher, we have bat, we have crab, we have butterfly, we have gatly, we have the A, B, C, D pattern, we have the shark, we have the cipher. So it's not something I have to discuss in this video. You have to join the academy to learn it very well. And we are running a discount now. So if you join now, you'll be able to pay at a very discount price and have access to the training and have access to our live sections and have access to our signals, have access to the course materials and have access to our mentorship. Okay. But I'm going to cover every aspect of the whole process. I'm going to cover the setup, which is the harmonic pattern. I'm going to cover the inducement liquidity and entry. Okay, so now I'm talking about entry. So on the potential reversal zone, for instance, we'll have this setup. Okay, so if we have this setup right here, I'm trying to make sure that this is how it is. I may not really get it perfectly, but something like this. Okay, so we'll have S, A, B, and then we'll have C. Okay, we'll have C, and then we'll have, of course, D. So how do we verify? How do we validate that this is a displacement? What is a displacement? A displacement is price moving in one direction impulsively, aggressively. That is a displacement, okay? So how do we validate? How do we validate that this move up, this move up, okay? This move up, how do we validate that it is a displacement move? Because what you will discover sometimes is that price will come to this point. Okay? Price will come to this point and then drop below. Let me just increase that a little bit. I'm not going to be fast on this video. I'm going to be very, very slow, please. I'm not going to be fast. So let me just remove all of this and do it again. I want to make sure that you guys understand everything. I'm discussing in this video. Okay. I'm not going to be fast. I'm going to take it step by step, step by step, step by step, step by step. Okay. So let's look at okay. Let's look at it again. So now at this point, when price drop to this level, okay, this is a setup we have. And then we'll have an inducement liquidity here. Let me just do something. Or for instance, we don't have inducement liquidity here. Okay. So this is just straight up in this form. We're going to talk about inducement liquidity very soon. Let's just understand the entry first of all. Now, on the lower time frame, when price drop here on the 15 minutes time frame, on the lower time frame, we want to see something like this. Okay. We want to see something like this. Okay. It could be in this form. Okay. That is what we want to see, something like this. This is the first one. It could be in this form. It could be in this form. Okay, let me see if I can duplicate this. Good. It could be in this form. Just follow what I'm doing, please. This is very, very important. It could be in this form. Okay, where we'll have something like this. Okay, it could be in this form. Could be in this form. Something like this. Okay. So now let's start from the first one, which is this one. Okay. So in this one, what we want to see is this type of W formation if we're looking to buy and M formation if we're looking to sell. So we want to see price taking out these points. Okay, so we'll have this could be X. This is A. This is B. This is C. We want to see price pushing to the upside, taking out this high, which is, of course, is a high, and then coming back into this place. So we'll look for entry at this order block here. So there should be an order block here. And if there is no order block, this last point becomes the demand zone. So we'll use the demand zone as entry if there is no order block here. Okay. So for order block, check my previous video for understanding order block and how it works and fair value gap. I've explained that before in this channel. So this is how the setup is going to be like. But how do we verify that this is a displacement? Because sometimes price will come to this point, very close, probably do something like this, and then drop to the downside. Should we be looking for entry here? The answer is no. So how do we validate to what extent are we going to be looking at the displacement to the upside or the break of this structure? To what extent? To what extent? So we're going to use Fibonacci extension level to look at that. Okay. So all we have to do is from the origin to the B point, back to the origin. Let me go again. From the origin, which is from C to the B point, back to the origin. We want to make sure that the extension level is greater than and equals to 1.272. So anything below 1.272, probably price was here and then pushed to the downside, is not valid. Let me do this again. That's why I say I want to take this step. I don't want to rush. I want to take it step by step, please. It's very important you understand what I'm doing. Let me take it again. Now, I'm going to use chart to explain everything. Don't worry, we're going to look at that on the chart. So all we are looking at for is from the origin, grab your Fibonacci extension tool from the origin to the B point, back to the origin. We want to make sure that this extension level that price got to before retracing back again, we want to make sure that it is greater than or equals to 1.272. We need 1.272. It could be 1.272, 1.414, 1.618, but it should not be less than 1.272. To add these video figures are very simple. Just open up the double click on the Fibonacci extension tool and then add 1.272, 1.414. You can just add only 1.272. You don't even need all of that, but you can still add all these ones. We want to make sure that this extension level, this displacement is greater than 1.272. If it's greater than 1.272, then it's a valid displacement. Okay, so if we have validated that, the next thing we look at for is during this course of this displacement, the price left behind fair value gap and other block at this level. Now if we use a Fibonacci tool, this is too much of information. I just want to make sure that you guys understand. We are not buying here. We are looking at for the other block and fair value gap. Valid order block. If we don't have any other block fair value gap, then this demand zone becomes our entry level. Okay, so this is what we are looking at for in this instance. Okay, so that is that. Now, in this instance, you can see that price took out the low of the previous low. Now, the second one, which is this one now, price did not take out the low of this one. It just probably did something like other double bottom before pushing to the upside. The same thing applicable here. We want to see price taking out that last swing high. Price take it out. Then we measure this displacement to know if it is more than 1.272 from the origin to the B point back to the origin. If it's more than 1.272, it's valid. So we now place our pending buy limit order here. We place our pending buy limit order at the demand zone or at the order block. If there is order block here, we use it as our entry, or fair value gap, we use it as our entry. It's just that simple, okay? So that is the entry criteria we'll be using during the course of this study. So I think I've explained. These are the same thing applicable if we are selling. Let me invert it. The same thing. If we are selling the same thing, okay? So we can as well take a screenshot of this. Let me see if I can do that. Let me remove all of this. Or just using this as an example, just to explain the concept to you guys. Okay. Good. Let me see if I can take a screenshot of this. Okay, so I want to snap it so that I'll be able to save it. Good. Okay. I'm going to save it as entry, bearish pattern. Okay. So back to this go again. Okay. Take a screenshot. Bullish pattern. I might attach the image to this video if I'm posting it on YouTube. So we've gotten that. So let's go to the chart and look at all of this. Now I have a pending setup here. Okay. I have a pending setup here. So let me see if I can bring that into extent. Good. So let me just remove all of this. Good. So I have a pending setup here. Okay. So now, since I have a pending setup here, this is a bat pattern anyway. So this is a bat pattern, but even though this looks like a double top, but I can treat it as 0.886 retracement. But this is like a bat pattern. Okay, it's like a bat pattern. If we don't want to consider, can consider this retracements here, but then this one is okay, fine. So this is like a bat pattern, and we have, like I said, if you want to learn about the harmonics, you have to join the academy to learn that. Within 2 weeks, you should be able to understand the whole harmonic patterns and be able to use our entry method we are discussing here to trade it. Okay. So I go down to the 15 minutes time frame. Now, which time frame should we be looking at for this MW pattern? On the 15 minutes time frame is good. Okay. So now you can see what price is doing here. So let me remove all of this. So where is the structure now? Where is the structure right here? Where is the structure right here? You can see that this is a swing high, right? Good. This is a swing high, right? So it can be from your X leg can be from anywhere. It can be from here. It can be from here, of course. This could be the S leg because this is the last swing high, then low high. Okay. So we are looking for we're looking for something like this, right? Price taking out this high. Okay, then we use the supply level, we use the demand level or the order block as our entry to the upside. So this is what we are looking for in this instance here. Okay, so now, like I said before, we have to use the Fibonacci extension tool from the origin to the B point back to the origin. We need to make sure that this as price is moving now, we need to make sure that this break of structure here should be more than 1.272, because what you will notice sometimes is that price will come to this point. It will push all the way up, sweep this high, and then continue pushing down. We don't want that kind of situation. So to avoid that, we need to put parameters into place to make sure that we are looking out for the valid displacement. So now, this is what we are looking for in this instance. So I'm going to group all of these. I'm going to group them, put them inside this place, lock it up, and then just leave it this way. You can put alert here if you're not going to be on the chart, so that if price gets to this level, you do that. But then intervals of 4 hours, intervals of 4 hours, you come back and check. After 4 hours, you come back and check. Now, price, this is 3 hours, 47 minutes. So in the next 3 hours, 47 minutes, you come back to the chart to see if it has developed. You don't need to keep looking at the chart every time. Or you can come back every one hour to come and check. You don't need to stare at the charts always. 4 hours, 2-hour interval is okay. After 2 hours, you come back to the chart and see if the formation have held for you to enter, because you're going to avoid unnecessary losses if you stick to this. Okay, you're going to avoid unnecessary losses if you stick to this. So let's look at this point. Let's look at this high here. Let's look at this high here and see if we have such formation on the lower time frame. Let's see. Remember, valid harmonic patterns comes first among all of these. So let's look at this. Let's start from this one as well. Okay, you can see that we had the same thing here. Okay, so we had the same thing here. This is the B point. Okay, this is the what? The B point, and then price push all the way down. Okay, so this, you can see there was no valid order block here. So this supply level becomes the what? The entry. Of course, you can see that price later came back again to that supply level. And you can see, I don't even need to measure it. This displacement is more than 1.272. From the origin to the B point, back to the origin. Price, we are anticipating that price, of course, should probably get to this point and then push back. But it did not happen. But it later came after a couple of days. It came back again to that level. And I think we had a valid harmonic pattern there. We are studying now. We are studying harmonic pattern. Yes, we have a valid harmonic pattern there. It was valid. It was valid. It was valid. But then the only issue here is that since we have had this situation here, okay, you don't necessarily need to wait for that to happen here, but it happened again here. Okay, so let's look at this harmonic setup. 0.382, 0.886. So we had a valid bat pattern. Okay, so we have a pattern in this form like this. Okay, okay, so this is the pattern. So I'm going to label it bat pattern. So I'm going to group them, put them inside a group to make my chart clean. I'm going to hide all of these ones, remove them, lock it up and hide it, and then open it up. Good. So let's look at what is happening there on the, what is going on? Okay. Okay, let's look at what is happening here on the potential reversal zone. Here is the last structure. The last structure was here. Later on, price gave us another structure here. Okay, so we now have that double top here. Okay, we'll have that double top here. And then we'll have the B point here. And the extension level to the downside. But then this was an aggressive entry. It was an aggressive entry at the B point. So now we measure to see from the origin back to this place, back to the origin, 1.272. Beautiful. So price got into 1.272 is valid. So your entry now is the what? The supply level or the order block. This is the order block. This was supposed to be your entry, but it was a missed entry. So you're going to have three categories of things that are going to happen on the chart. Three categories of things. First is we'll have a win. Second one is loss. Third one is missed entries. There is no break even. So there is no break even. It's either we are having a win or we're having a loss or we're having a missed entries. So try as much as possible to avoid loss. It's inevitable, but try to reduce it. Have more wins and then missed entries. Now in this instance, now we had a missed entry here. But if you use this point, this last candle now, we'd have gotten an entry at the middle point, which is here. So it is another entry again. You can use this one also to get a sniper entry as well. Stop loss above that high. Okay. So that is what you would have also done as well. So that is also valid. So if we have a W formation or M formation in this form, and then we'll have our displacement, we can use the last candle here. This last candle, we can use it as our entry. If the distance of this B point to the origin point is not that big, you can use this last candle here as the entry. So if price comes back aggressively into this level, we can tag you in and continue. So that was what happened here. You can see that M pattern was there. The M pattern was, you can see the M pattern was there. Okay. And then we'll have that playing out there. So that is what you're definitely going to observe. That's what you're going to observe. Sometimes it's going to be that way. Okay. So take profit level 0.382 and 0.618 from X to A, from A to D. So have 0.382. And I even do I can do 0.786. That's right. 0.786. But you can see this one was very aggressive. Beautiful you made crazy profits. 1:4.49. Crazy profits on this trade. So let me hide everything, put them in a place. So you're going to study all of these concepts to make sure that you understand everything. So let's look at more example as well. Let's look at more example. 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 Now, in this instance, now we also have inducement to that high as well. You can see this was the inducement also. I think I didn't include that. This was the inducement. The last swing point, that was what validated this potential reversal zone. Price took out that inducement also. Very important as well. So like I said, we're going to talk about harmonic pattern, inducement, and then entry confirmation. So let's look at more pattern. So let's go to the higher time frame. Let's go to the higher time frame. There was trade I took in the past. Let's check. That was trade I took in the past. Since they have all gone. Okay, let me just start from here. So you might sometimes see this pattern on the higher time frame as well, but it is always, if you want to get those sniper entry, look for them on the lower time frame. So let's look at this setup. Let me see. Let's look at this setup here. Okay. Let's look at this setup. This one here. So let's go to these points. Let's go to this point. So what do we see here? First of all, I see this other block. You can call it demand supply level, this other block. Of course, this is the unmitigated one here. This is the unmitigated other block here. And then before that, I can see this inducement liquidity. That's the last structure closer to the potential reversal zone there, okay? So that is what I can see at that level. I'll see at that level. But price didn't even get there. Price did not also get here. So let's look at below that as well. Second one. Second one is also this other block. This is also another block. It's another block. And then before that other block, we also have this ones. Liquidity as well. Okay, so I think this was the one that price reacted from. So all of this is going to determine where your pattern is going to complete. So it doesn't necessarily mean anything. It's all about where your pattern is going to complete. So let's look at this whole stuff, probably from the daily time frame to get more clearer picture of that level. Okay, so let's go from that high point, from this swing high, to this swing low. Okay, so this is 0.382 and that is 0.886 of the BAT pattern. Okay, so we'll have this. We'll have this. So this is what 0.886 of the what BAT pattern. Okay, so let's enclose that. Beautiful. Okay. So now let me explain what's happened at that top. Remember that we had two potential reversal. We had two other blocks at that level with inducement liquidity. But then what comes to your mind is here is the valid setup. That is why sometimes you need to look at the harmonic pattern before you can consider the point on which price is going to react from. Because the harmonic pattern is going to tell you that this is the valid setup. So now when you get the valid setup, you now look at that valid setup to know if you have a key level that is at that level. I don't know if I'm making sense. Now, when you don't know which of the key level to go for the harmonic pattern, right? When you have 2 key levels or 3 key levels and you don't know the one to pick your trade from, go with the harmonic pattern. get a valid harmonic pattern. Then when you have a valid harmonic pattern, then you can now look at to see the one that is valid based on the harmonic pattern you have. That was what happened here. So we had two area of order blocks. So to differentiate the one that is valid and the one that is not valid, we look at it from the point of view of what valid harmonic pattern. Now you can see that we had what a valid bearish bat pattern on this level, and that 0.886 aligns with the second order block. So that was what made it valid. So we now discarded the first one. It is just that simple. So that is why harmonic pattern is very, 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 very very effective, and it works like magic. So that is how to be able to mitigate that kind of issue. Okay. So that is how to mitigate that kind of issue. So let's continue. Let's continue. So I'm gonna label this bat pattern. Yeah, so let's look at this entry. Now, I might not really go down to the 15 minutes time frame because it is a long price history. But let me look at 2-hour time frame to know if we get that W pattern from there. I'm not even sure if I can get that. Okay, I think I can get that. So let's look at if we're able to get a W pattern here. Yes, we're able to get a W pattern here. Look at, if you go down to the 15 minutes time frame, you will find out that this was a structure, all of that, and all of this. Okay, so make this big enough, make this right. If you go down to the lower time frame, consider this was a structure here. So how do you take the entry? It's very simple. Consider this as price. After we confirm this M pattern there, we had what? An order block, which is this one, the order block. And price came there. And remember that we also had inducement liquidity there as well. This was inducement liquidity. Beautiful. So we had our entry from there. You can as well have your entry from the middle point of this last candle, this candle, which is still valid. You're going to be in a drawdown and it's normal. But then you only take this one if you don't have a valid order block at the top. If you don't have a valid order block, that's when you can choose this last candle. But if you have a valid order block, choose that order block as your entry. Price will definitely come back there. So that is that. Okay, so we'll take our entry from this order block, which of course price later came there. Now this has been old price history. Sometimes you must have taken your entry from here. Let's look at the reality. If price come here, you might have taken your entry from this candle or so. This is beautiful. But hold to drawdown, hold to take profit level. There is no break even. It is either take profit level or what? Loss. So that is that. So let's go down to, so that's how we're able to get that take profit level from down there, from that high. So we're able to achieve that one. So let me add the stop loss and the take profit level. So stop loss is 10% or 15% distance from the potential reversal zone, which is around here. Take profit level 0.786. Yeah. Okay. Solid 1:6. Beautiful. Okay. Beautiful. So this is how we are studying the concept of inducement liquidity and all of that. And when price was dropping to these points, I was looking out for a valid pattern as well. Okay. I was looking out for a valid pattern as well. I'm not sure if I've gotten an entry here. I'm not sure if there was any valid anything. First of all, the only this thing I have is this one, 0.382. Okay, we'll have this one. I think we also had another bat again, but then it's supposed to be here. You know, we had this one here. Okay, based on this other block. So do we have any kind of MW pattern here? Let's check. Yeah, we have, but there was no entry. There was no entry. Look at it here. Look at it, but there was no entry. There was no entry. These points, price push all the way up, and it continued to go. So it did not come back. It didn't come back here. It just pushed all the way up, and that was the end of it. Though you got a little bit of retracement here, but so this one is in the category of what? Missed entry. Missed entry. So it's a missed entry and it's a missed trade, and that is it. So that was it. That was a missed trade. There was no entry. Except probably if you go down to lower time frame, if price later came back based on that reaction. But from that point, nothing happened there. Okay. So let me just do this. Let's see, missed entry. Beautiful. Okay. So I'm gonna hide that and zoom. Good. So there was also another pattern that came up here, which I feel this one would have given us an entry, but I don't really know. I don't know. B points price didn't even come here, push all the way up. Another missed entry as well. Let me just mark it out. But then it was supposed to be a bad pattern, but it did not, it's not valid. 0.382 was not tested. So this one was not valid. This one was not valid. Not valid. Okay. It's not valid. So that is just how to do that. Let's see how our little pattern is developing to see if we have a valid entry. You can see nothing at the moment, nothing at the moment. So you just have to wait it out and see how it plays out. But then there was a pattern that we traded that was let me hide this. Sometime last year, I think it should be this guy here. Remember this particular one, it was this guy. Alternate bats. Beautiful. Yeah, it was this guy, alternate bats. So let me just mark it out. Mark it out. Make it out. Beautiful. Yeah, so this was the setup. Not sure if we got an entry there, but let's look at. First of all, we had this high, which of course is the inducements, and then we had this order flow. Is the order flow, which has not been mitigated. Of course, inside that we also had an order block, which price did not even come to, but it took the order flow and dropped aggressively to the downside. So let's go down to the lower time frame to see if we got any entry based on our entry criteria. Okay. So let's go down to the lower time frame. Alternate back, right? So let's go down to the lower time frame. Okay. Let's see if we're able to get any entry on that level. I'm already seeing an M-type formation. I'm already seeing M-type formation. Here. It could be like this, could be like that, but I'm not sure. Let me check 2-hour time frame. Can I even get 1-hour time frame? This is this year's price action. Let me check 1-hour time frame. Okay. I'm not sure. 15 minutes, 30 minutes. Is it possible? Okay, it's possible. Yeah. So let's see if we see our M pattern here. Did we see any M pattern here? Let's increase. Did we see any M pattern here? Remember, this is where the pattern completed. Did we see any M pattern here? This is the first one, right? Which other one? This big one, right? So let's look at them together. Let's look at them together. So let's look at the first one, which is this one. Okay, this is the first one. So let's look at it. First of all, is it a valid displacement from the origin to the B point back to the origin? It is valid, okay? So now, do we have any other block, any other block, any other block, any other block, fair value gap? Yes, we have. Use this one. You can be using the fair value gap as entry if the other block, because sometimes if you're looking at the other block, price may not even come there. So the best you can do is to use this what do you call it, this fair value gap, which is that gap between that one. You can use this as entry. It's advisable you use the fair value gap. Just use the fair value gap as entry. If you're using the other block, it's going to be a sniper entry. Sometimes it may not really get tagged. So use the fair value gap. It's still the same thing. So it's still the same thing, right? It's still the same thing. So let's mark out our M type formation again. Mark it out. This one, this one, this one. Simple as that. If you get used to it, you have gotten used to it. It's just that simple. So our entries are this other block, just at the middle point. So our entry stop loss is going to be that high because price can react from anywhere. So always put your stop loss above that high, above the high. Always put your stop loss above the high, okay? Where are you now? Always put your stop loss above the high. So now if you look at it from the 2-hour time frame, it may not really be visible, but if you go down to the lower time frame, you're going to get all those sniper entries. Okay, so let's remove this one. Then that was how we're able to get that entry based on our entry criteria. So I just hope this study, you guys are learning something from this study. If you're watching the replay, please, if you have any question or anything, just let me know. So this will bring us to the end of this study on US oil. So I'll be releasing different studies on different currency pairs and all that subsequently on this channel. So this will be all for now. So that was how we're able to achieve this massive take profit level on this asset. Combining what? The knowledge of harmonic pattern, the knowledge of inducement liquidity, and the knowledge of what? Entry criteria. So I'll do a video on most of the assets like Bitcoin, like gold, currency pairs, and some cryptocurrency pairs as well. So I'll be releasing study videos on all of them so you can be able to get used to it because it's through repetition, you'll be able to get better at what you are doing. So we'll watch this video, and if you have any question, please always reach out to me. I'll be able to answer you and provide my best possible advice and recommendation. So remember, this is not a recommendation for you to buy or sell any asset. This is how I trade. This is how I trade, and this is how I look at the chart. So remember that no strategy is 100% proof to losses. Always manage your risk and then do your due diligence before taking any trade. And remember that do not trade with more than what you can't afford to lose. Okay. So love you guys, and this will be all for now. And this is how we're able to, let me just finish this one. And this is how we're able to achieve this massive take profit level on this US oil trade. Yes. I posted this trade. That was why I was able to remember. It took a lot of days. There was a lot of struggle. I almost gave up on the trade, but I just held. I took some partial profit and left the rest to run. It took a lot of days. It took like 1, 2, 3, 4, 5, 6, 7, 8. It took a lot of days for price to be able to get to take profit level from this point to this point. It took like how many days? 40 days, guys. It took 40 days. That was 2 months. More than 2 months. It was a lot of pips. It was a lot of pips. And it was a lot of massive profits. Massive profit, guys. Massive. And this one is dumping now, like I said. We don't have any entry. We don't have any entry at all. Okay. We don't have any entry at all on that level because on the 15-minute time frame, let's see. Good. This is how to avoid loss. This is how to do what? Avoid losses. Remember that when price came here, this was what? The high, right? Good. This was the high. Price did not take out that high to give us that W pattern. So now we are seeing a lot of things happening here. So no matter how, if origin to B point back to origin is not up to 1.272, or even this place is not valid. So we want to see that displacement to this side, and then that was what will give us. So if there's nothing that you can be able to take out from this video today is entry, M and W entry criteria and strategy. So I mean, I know you have been hearing about M and W formation for entry and reversal. You may not even know how to trade it, but watching this video now, you have a guideline on how to be able to approach it on the charts. So that is how I trade, and I like sharing my ideas because personally, I also like watching my videos as well. Yes, because you have to keep doing it every day to get used to it. So as you rewatch this video, if you have any question or any issues at all, please always reach out and let me know. I'll be able to, answer your questions. So this will be all for now on this US oil. I'll be releasing subsequent videos on different study on different assets. You can as well watch and then learn one or two things from the video. So I love you guys, and then bye for now, guys.